Welcome back, investors. Jake here. In this video, let's talk about the position I've taken in HCI Group. I've been getting a lot of questions and comments about it. Here is my current portfolio with Charles Schwab. Mostly, I'm just leveraged on call contracts that are very far out in the future. Currently, I'm up on Texas Instruments, HCA, General Dynamics, Apple, and Berkshire. Last couple of videos, I did warn you guys about Berkshire that it was due for a breakout, so I'm up pretty big on that position. I am currently down on Capital One, but it's green today. I'm pretty confident by January this will be green as well. So easily, amongst all my positions in my accounts, the worst one is HCI Group. Currently down 24% overall on my cost basis, which totals a little over $3,000. Now, when I took this position, it was 20% of my accounts, but obviously things have been shuffling around here. So before we get into the details of what's happening with HCI Group, I just want to tell you that I'm not selling. I'm still pretty confident that I will be making money on this position. So if you see a position you've taken in the short term go down, that's not immediately a reason to sell it. Just like if you see a stock shooting up, that's not immediately a good reason to buy it. You should have a game plan and a goal, an objective for why you entered a position. And I'll explain in this video, but what I saw 2 months ago when I took this position, I still think it's there, so I still have confidence I'm going to make money on this position in HCI. So when we look at the 1-year chart for HCI, it's up pretty big. Even with the recent downturn, it's still up 90%. I bought in around here in October, November. It basically peaked on November 1st, and since then it's down 30%. Ouch. So yes, it is a bit dramatic. However, if you've seen my previous videos, you know why I'm in this stock. HCI Group is a real estate company in Florida that developed basically a mobile insurance app called TypTap. They're currently only operating in 5 or 6 states, but they're about to expand nationwide. It's an app you can download on your phone. You can take a picture of your house, put in some basic details, and within 5 minutes, you can get a quote how much you can pay for homeowners insurance or flood insurance on your house. So HCI is once again just a real estate company in Florida, but they're spinning off. They're going IPO with TypTap, and I think the IPO valuation of TypTap is going to be greater than all of what HCI is valued at today. This is important. HCI today is only valued, everything included, only at $1 billion basically. So with HCI selling off, I just check the news every day, guys. I ask myself, has anything bad happened to TypTap? Is there anything that's going to hurt its IPO valuation? No new news in the last month, basically. Same thing with HCI Group. I search for that. Has anything bad happened to this company? Has a hurricane hit Florida in the last month? Absolutely not. There's nothing wrong with HCI. There's nothing wrong with TypTap. So why? Why a 30% sell-off in the last month and a half? And it's because the other small cap stocks are selling off. All these high growth, high PDE, price to sale ratio companies in the small caps are currently being dumped because they were kind of overvalued. And the two companies that TypTap is being basically traded with by investors because they're similar services is Hippo and Lemonade. Hippo is an American property insurance company out of California, offers homeowners insurance that covers homes and possessions. And it looks like it went SPAC in July of this year, and from basically its SPAC opening, it's down 72%. That is a terrible performance for the share price of this insurance company, meaning it was horribly overvalued when it went public as a SPAC. However, I don't know anything about the fundamentals of this company, and I don't need to because its market cap is $1.52 billion. The valuation of this company, even after it's dropped 72%, is still greater than all of HCI combined. HCI is still a real estate company operating out of Florida, in addition to the future valuation that investors are going to give TypTap. This is currently only $1 billion. So Hippo on its own is 50% greater. The other company that HCI is trading with is Lemonade, and Lemonade is also offers renters insurance, homeowners insurance, car insurance, pet insurance. This stock went IPO in July of last year. There was a lot of buzz, a lot of hype. It shot up huge through February, 136%. And since its peak in February, along with all the other high growth Cathie Wood stocks basically, this company is down 74%. Holy cow. Once again, I don't know anything about the fundamentals of Lemonade, and I don't need to, because their market cap is $2.62 billion. So Lemonade, on its own, is worth almost 3 times as much as all of HCI, with TypTap included. This is why I'm still confident there's a price mismatch here. Even with the sell-off of Hippo and Lemonade, as soon as TypTap goes public, investors are going to see that. Well, TypTap, if it doesn't get a valuation greater than this, they're going to say it's cheap compared to Hippo or Lemonade, and they'll buy or they'll prefer TypTap over these companies purely based on market cap valuation. And in my last video, I talked about the small cap index basically underperforming the S&P 500 because there's so many IPOs. There's so many IPOs and SPACs happening right now. And my argument, guys, is it's just a cash grab. That's why I'm in this HCI trade. I don't want to be buying IPOs or SPACs. I want to sell one. I'm trying to get in HCI so that I get basically IPO shares of TypTap, and then I can just dump them for a profit on day one. And I still think that's going to happen. But let's just talk about the downside risk, the concern. Is the market, are investors basically getting fatigued on all these IPOs? There have been 953 IPOs in 2021 so far, an all-time record. And this is just through the first 3 quarters of this year. There are more IPOs than the previous record-holding year of 1996 during the dot-com boom, also known as the dot-com bubble, also known as the dot-com crash. All this flood of supply of new companies going public with sky-high valuations, it really hurts the small cap index. Anybody not in the S&P 500, because they're buying all of these companies, and they're not bad companies, they're just overvalued, and they're looking to sell more shares. They're looking to raise more capital and dilute you, the shareholder. And the most recent example that just has me scratching my head is Harley Davidson. For those who don't know, I'm from Milwaukee, Wisconsin. Harley Davidson's headquarters is in Milwaukee, Wisconsin. And Harley Davidson will take its electric motorcycle division public through a blank check company, valuing the enterprise for $1.7 billion. That's $1.7 billion that Harley is going to get just for creating a new company through a SPAC to sell its electric motorcycles. And this is honestly just a gimmick, guys. It's just a trick to basically raise a bunch of money. So let's just look at this. The news that they were doing this gave a jolt to long-suffering shares of Harley Davidson, which jumped 12%. And this is how crazy short-term traders are, guys. So here's the news that Harley Davidson was spinning off their electric motorcycle to be its own company. The shares shot up 15%, and then it crashed back down 12%. Because it doesn't really... is there really a point to doing this? I mean, it looks like a fantastic motorcycle, but with the buzz of Rivian and Lucid and Tesla and NIO and all these electric car companies, Harley Davidson wants to highlight its electric motorcycle, be the first purely traded electric motorcycle company. And yeah, I mean, so here's the news. Under the agreement, the Special Purpose Acquisition Company will buy Harley-Davidson's LiveWire and make it the first publicly traded electric motorcycle company. LiveWire has been a part of Milwaukee motorcycle maker for 10 years. Harley-Davidson's chairman and CEO will hold the same position at Livewire for the first 2 years. So the guy in charge of Harley-Davidson, this company, is also going to be in charge of Livewire. What's the there's no reason why Harley-Davidson, which is a motorcycle maker, needs to form a new company unless it's basically just a cash grab. That's my argument with all of these IPOs and these stocks. And that's why I'm in HCI Group, guys. So HCI has several divisions: property and casualty, real estate, reinsurance, and insurtech. This is TypTap. They could have just kept TypTap part of their company and naturally their market cap would rise over time, but they're going IPO as a cash grab. And I still think it's going to work. I still think with all of these IPOs and all the fatigue and the collapse of the small cap stocks, that they're going to get this deal done. They're going to announce the details and HCI's stock price is going to shoot up huge. I think it'll sustain itself a little bit longer than the Harley-Davidson one. This didn't sustain itself because this is going SPAC. It's not going IPO. So for those reasons, I'm not selling my position in HCI, and to kind of gauge what TypTap's IPO should be worth, you can go back 10 months to before HCI announced the TypTap deal. So right now, the market cap of HCI is $1 billion and the share price is 94. So there's basically a correlation between the share price and the market cap being almost an even number, meaning that HCI, prior to the TypTap IPO announcement, was worth about $589 million. So the fact that HCI has increased this much since February, TypTap has already been priced in by about $400 million. However, there's no way that I see this company, with the revenue growth it's getting by going nationwide, only getting an IPO valuation of $400 million. That just seems very low once again when you look at the valuation currently of Hippo and Lemonade. So yeah, let's give it another month, guys, and see what happens. It is tempting to add shares to my current position to dollar cost average down, but I'm just not going to do that. There's other things I want to be doing with my money, and tying up a down position for another month waiting for this IPO to be announced. I'm gonna do it because I don't want to miss the pop when it happens, but I'm not going to add to this position right now. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.